You don't see shows like LA Tax or Boston Accounting, and The Good Wife isn't about a tax practice. And I don't even think how a show like Scrubs could translate to accounting. What would you call it? Tick marks or 10 keys? Yes, accounting can be pretty boring. It's okay, as a CPA, I don't have any feelings that I'm aware of. Okay, one thing, because I know this will come up. No, I have not seen that Ben Affleck movie called The Accountant. It's just not something I've wanted to see. However, if this channel gets 1 million subscribers, I will watch that movie and make a reaction video about it. Aim high, am I right?
Yeah, boy.
Hello to all my financial people and business people and side hustlers out there, and welcome to Just the Tax. This is my little channel about spreading the good word of financial literacy, so it's more than just the tax. Real CPA here with a movie review. There's a movie out there called Everything Everywhere All at Once, and it's starring Michelle Yeoh, Kwan, who folks from my generation will recognize as Data from the Goonies and Short Round from Indiana Jones and the Temple of Doom. So great to see him back on the big screen again. And also James Hong, one of my favorite actors, and also Jamie Lee Curtis, who totally transformed for her role. Before getting into the nitty-gritty, go see this movie. It's fantastic. If you're sick of all these sequels and how all the movies are basically the same movie with a different title, this movie is original, it's unique, and it's really, really well done. As an aside, I am looking forward to seeing Rocky 5000 one of these days. I'm sure it'll come out. Okay, so you're asking, why is a certifiable bean counter talking about a movie? Great question, and here on Just the Tax, we're going to take a look at Jamie Lee Curtis's character from the movie, where she plays an IRS auditor who's auditing the tax return for Michelle Yeoh's and Ke Kwan's characters. So as a public service announcement, we're going to talk a little bit about the IRS process and also the tax law that Jamie Lee Curtis's IRS auditor used to try and nail our protagonists, a mom and pop business, as well as steps you can take to protect yourself if you're ever in this kind of situation, as well as the most important advice to consider. First though, quick disclaimer, this video is for educational purposes only. I'm not selling you anything. Watching this video will make me happy, especially if you like, share, and subscribe, but it won't make me your accountant. I am @RealCPA, but I'm not your CPA. Hashtag not tax advice. Okay, let's talk about this movie. First, the writers really did their research on the IRS, the audit process, how small business owners manage their receipts, and wow, Jamie Lee Curtis really inhabited this role as the difficult IRS auditor. Second, it's important not to get hung up on stereotypes. Most IRS agents are decent, hardworking folks that they just want to do a good job. They're not out to destroy people. In more than 2 decades of public practice, I can say I've only had a small handful of encounters with the kind of unpleasant person for which you'd think would fit the stereotype. Which, if you think about it, for such a large organization, there's always going to be a handful of negative people. Third, this is a movie, so they have to dramatize and summarize some of the details in order to advance the plot and keep the audience engaged. But even with that, they still got a lot right. Fourth, Jamie Lee Curtis's auditor character makes a comment about these little bits of paper and how the numbers tell a story about a person's life. And she's right on that. A lot of people think that accounting and tax is this impenetrable beast, and it's not. It's just another way of expressing a story, like the little green numbers on the matrix. You can see a person or a business's life cycle through these documents. A painter paints, a poet writes, and an accountant accounts. All right, let's talk about process. There are 3 kinds of IRS audit. There's in-office audit, and that's what's depicted in the movie. This is where you go to the IRS, and this is the most serious kind of audit. Second is your office, or a field audit. This is where they come to you, and sometimes, or usually, it's a surprise. The third kind is a correspondence audit, and this is the most common type because it's the most cost-effective for the IRS. If you ever get a notice, first, make sure you open it. Look at the top right corner of that notice and see if there's a code, CP-2000. That's a type of audit, usually due to a mismatch, such as if you forgot to include a 1099 or a W-2 on your tax return or something. See my other video on 1099s. Now let's talk about tax theory. In the movie, they mentioned something called Schedule C, and this is the form used to report the income and expenses for the simplest type of business, a sole proprietorship, and sometimes a limited liability with a single owner. It's a fairly simple form because you don't have to deal with a balance sheet. But these forms, they're attached to a 1040, the individual income tax return, and therefore they do have a higher chance of being audited than other business types. Specifically, all cash businesses or businesses in certain industries that fall outside the third-party reporting system have a higher chance of being audited. See my other videos about the problems of the third-party reporting system and also about what to do about 1099s. In the movie, Jamie Lee Curtis's IRS auditor character says that they'll need separate Schedule Cs for each businesses. And that's true in theory, but there are other ways. If the activities give rise to a small amount of income but don't rise to the level of an ongoing business, you can just report this as other income subject to self-employment tax and save yourself some complexity. The auditor picks through the receipts and separates out the business and ostensibly personal expenses. And this leads to an important thing. Internal Revenue Code Section 162 says you are allowed to deduct ordinary necessary business expenses. But Internal Revenue Code Section 212 says you're not allowed to deduct personal expenses except for a very short list. Think medical donations, mortgage interest, state and local taxes. In other words, the tax man giveth and the tax man taketh away. The interesting tax theory brought up in the movie by Jamie Lee Curtis's auditor character is that she automatically assumed that a karaoke machine purchased by the couple is either a separate business and therefore should go on its own Schedule C, or a personal expense, but otherwise not deductible on the laundromat's Schedule C. The reality, though, is that it could be deductible on the laundromat Schedule C if, say, they use the device to encourage more people from the community to come into their business, which would then increase revenues. If they could demonstrate that they procured this piece of equipment, had it in use in the laundry's facility, and that they did in fact contribute to an increase in revenues, the IRS would be hard-pressed to disallow this deduction. There are 3 things in the movie that made me cringe, though. So much paper. So much paper. So much paper. There's a whole ecosystem of cloud-based apps out there that make accounting so much easier. It would be so much better for the family if they had a basic accounting system. Going through an audit would be a lot easier since the transaction could be summarized in a report and printed out. The protagonist in the movie, an immigrant family, not unlike my own family from about 100 years ago, had a small business and it was cash-based. And I understand that struggle, and it did feel like the IRS was bullying them. It does happen. And also, you have to separate business and personal transactions. That's settled law. You're supposed to have a separate checking account specific for the business and one for personal items. Pay yourself a draw. Don't pay your rent and groceries out of the business. The third thing that made me cringe is a question I get all the time. But I didn't take any money out of the business. I'd like to. Well, how much can I take out? The answer, generally speaking, is you're paying tax on the net earnings of that business whether you pay yourself or not. So take your money if you need it. Remember, this is a sole proprietorship we're talking about here. Other business types like corporations and partnerships, they have their own peculiar features. Most important, if you take nothing else out of this video, the best thing you can do if you find yourself being audited by the IRS or a state tax agency is hire an attorney, a CPA, or an enrolled agent. The only thing you should say to the IRS agent is, please speak with my duly elected representative, and then don't say anything else. A lot of times, agents will ask questions to draw people out and get them to agree to things that aren't necessarily true. The agent represents the government, not you. Don't go in pro se. That old saying, the person who represents themselves has a fool for a client, don't be that guy. And if it has to be said, this video won't qualify you to represent yourself. Okay, so that'll wrap this up. I hope you enjoyed this video, hope you learned a thing or two, and go see this movie. It's really fantastic. All right, my fellow financial people, thank you for watching this video. Please like, share, and subscribe, and in the comments below, post some requests for topics you'd like me to cover in future videos. In the meantime, may your profits be high, your taxes low, and I'll see you next time back at Just the Tax.